the Australian dream. For generations, it conjured images of sun-drenched prosperity, a quarter-acre block, and a steady march towards comfortable retirement. But beneath the surface of our vibrant economy, a powerful undertow has begun to pull, reshaping the very landscape of financial stability for millions. Today, we delve deep into the modern Australian economic shifts, examining the catalysts, the underlying drivers, the points of divergence, and what lies ahead for our nation. TI, the catalyst and current state. Welcome, I'm Adam, and in a nation known for its resilience and resourcefulness, a new set of economic challenges has taken root, impacting everything from the cost of a weekly grocery shop to the prospect of home ownership. Inflation, a concept many Australians under a certain age had only known from history books, is now a tangible daily reality, gnawing at household budgets.
It's exhausting, frankly. You go to the major national supermarket and the price of basic produce, staple items, it just keeps climbing. My family's weekly shop, even with careful budgeting and planning meals, is significantly more expensive than it was just 2 years ago. We've cut back on everything non-essential. Even small luxuries are now carefully considered, which wasn't the case before.
Chloe's experience is echoed in the national data. The Consumer Price Index, our key measure of inflation, surged considerably from its long-term average in recent years. While we've seen some moderation, it remains elevated above the Reserve Bank's target band, necessitating a firm monetary policy response. The speed and magnitude of interest rate increases by the Reserve Bank of Australia have been particularly impactful. The official cash rate, once at historically low levels, has been aggressively lifted to levels not seen in over a decade, directly translating to higher mortgage repayments for millions of homeowners.
The Reserve Bank's primary mandate is price stability. When inflation began to accelerate, driven by both global supply shocks and robust domestic demand, action was unavoidable. The swift adjustments to the cash rate were designed to cool demand and bring inflation back within the desired 2 to 3% target range. It's a delicate balancing act, to curb inflation without unduly stifling economic activity, a challenge amplified by global uncertainties.
The property market, long a cornerstone of Australian wealth, has also felt the ripple effect of these shifts. Despite rising interest rates, median house prices in our capital cities have demonstrated remarkable resilience in many segments, even showing renewed growth in some areas.
For anyone trying to get into the housing market, it feels impossible. Prices are high, borrowing capacity is down because of the interest rates. Every open house is packed, and you feel like you're competing against an endless stream of buyers, many of whom seem to have deeper pockets.
The property market's response has indeed been complex. While some initial softening occurred, a combination of factors, including persistent housing supply shortages and strong underlying demand, have propelled prices upwards AGN. Affordability metrics have deteriorated significantly, particularly for first-time buyers, requiring higher income multiples to service a mortgage. We're seeing household debt-to-income ratios remain elevated, a key vulnerability that the Reserve Bank closely monitors.
The Reserve Bank acknowledges the impact of higher interest rates on households with mortgages. These adjustments are a necessary part of the broader effort to restore economic stability. However, the overall health of the financial system, including the major commercial banks, remains robust with strong capital positions. While pockets of stress exist, the system is designed to absorb these shocks, a testament to robust regulatory frameworks.
T2. Underlying structural drivers. To understand the present, we must look to the past and to the powerful structural forces shaping Australia's economic trajectory. These aren't transient fluctuations, but deeply embedded trends influencing everything from our property market to our long-term superannuation outlook.
One of the most significant structural drivers in the property market is the chronic undersupply of new housing. For many years, the rate of new dwelling construction, particularly in established urban areas, has struggled to keep pace with population growth and demand. This isn't just about land availability. It's about planning regulations, development costs, skilled labor shortages in construction, and infrastructure constraints. We see this reflected in vacancy rates, which remain historically low in many capital cities, putting upward pressure on rents and consequently property values.
Population growth is a critical factor here. Australia has long relied on migration for economic expansion, and recent inflows post-pandemic have been substantial. While migration is beneficial for the labor market and productivity, it does exacerbate housing demand if supply doesn't respond in kind. The Reserve Bank considers demographic shifts in its long-term economic modeling, understanding their profound impact on demand for goods, services, and housing.
It's a double-edged sword, isn't it? We need skilled workers. We need people to keep the economy going. But if there's nowhere affordable for them to live, what happens then? You see the impact on essential services too. Doctors, nurses, teachers. They need somewhere to live near where they work. And if they can't afford it, it just creates more problems down the line.
Beyond housing, the shift towards a more services-led economy, coupled with global supply CHN vulnerabilities, has also played a role in our inflationary environment.
Absolutely. The pandemic exposed the fragility of global supply CHNs. Even for a country like Australia, reliant on resource exports, we import a vast array of manufactured goods and components. Disruptions from geopolitical events, energy price shocks originating from overseas, and lingering effects of global lockdowns have driven up the cost of imported goods. This imported inflation has been a significant contributor to our domestic CPI, complicating the Reserve Bank's task as it's less responsive to domestic interest rate changes.
The global economic landscape is undergoing significant realignment. Deglobalization trends, shifts in trade relationships, and persistent geopolitical tensions contribute to elevated commodity prices and supply chain uncertainty. For Australia, as a major commodity exporter, this can be a net positive in terms of trade surplus, but it also exposes us to global inflationary pressures that are difficult to mitigate domestically. The Reserve Bank monitors global indicators closely, understanding that Australia's economic performance is inextricably linked to international developments.
And what about our superannuation system? A world-leading model, yet it too faces evolving structural pressures.
The superannuation system, with its substantial asset base, is a cornerstone of Australia's financial stability. However, it faces demographic headwinds. As our population ages, the proportion of those drawing down on their super will increase relative to those contributing. Longevity risk, the potential for individuals to live longer than anticipated, also presents a long-term challenge for fund sustainability and adequate retirement provisioning. Furthermore, the concentration of superannuation investments in asset classes like domestic equities and property means its performance is closely tied to the health of the broader Australian economy and global markets.
T3. Institutional and consumer divergence. In the bustling cafes and quiet suburban streets across Australia, the official economic narrative sometimes feels disconnected from the lived experience. This divergence between institutional data and consumer reality is a critical aspect of our current economic landscape.
When you hear statistics about the economy doing well or unemployment being low, it doesn't always match what you feel. Yes, some people might be doing fine, but for many families I know, it's a constant struggle to keep up. We're not seeing wage growth keep pace with the cost of everything, so even if there are jobs, the quality of life isn't necessarily improving.
Chloe highlights a crucial point. Aggregate data can mask significant distributional impacts. While the national unemployment rate has indeed remained low, underemployment, where people want to work more hours but cannot, can still be an issue. Crucially, real wage growth, wages adjusted for inflation, has been negative for a sustained period, meaning purchasing power for many Australians has diminished. And this creates a tangible gap between the headline figures of economic strength and the household experience of financial strain.
The Reserve Bank's models are built on aggregate data, providing a broad overview of the economy. We understand that these aggregates don't always capture the nuances of individual circumstances. Our focus is on achieving price stability and full employment across the economy, creating the conditions for sustainable growth. However, the impact of policy decisions varies across different income brackets and wealth levels, something we are acutely aware of.
This divergence is particularly stark when we look at wealth. While some Australians have seen their assets appreciate, others are struggling just to meet daily expenses.
Wealth inequality is a growing concern. those who own appreciating assets, like residential property or diversified investment portfolios, have seen their net worth increase. Meanwhile, those who are renters or struggling to save a deposit for their first home find themselves further behind. The intergenerational wealth gap is widening, with younger Australians facing unprecedented hurdles to accumulate wealth compared to previous generations. The rising cost of education, healthcare, and housing creates a formidable barrier to upward mobility for many.
It feels like the goalposts have moved, or perhaps been completely removed, for my generation. My parents and their parents could afford a home on a single income in many cases. Now, it takes two high incomes and often help from family. It changes the dynamic of family life, career choices, and even where you can realistically choose to live.
Monetary policy, while powerful, is a blunt instrument. It influences aggregate demand, but cannot directly address structural issues such as housing supply, wealth distribution, or specific social support measures. These are areas where fiscal policy and broader governmental reforms play a critical role in complementing the work of the Reserve Bank. Collaboration across government agencies is essential to ensure a holistic approach to national economic and social well-being.
TFE, Forward Macro Projections. As we look ahead, what does the future hold for Australia's economic landscape, its property market, and the vast reservoir of superannuation savings? The path forward is fraught with both opportunity and significant risk.
The immediate focus rests on inflation and the trajectory of interest rates. While inflation is expected to gradually return to the Reserve Bank's target band, the timeline and the precise path will depend on global developments, domestic wage pressures, and consumer spending. Future interest rate decisions will be data-dependent, with the Reserve Bank closely scrutinizing employment figures, wage growth, and, crucially, consumer confidence and spending patterns. A key risk is persistent, sticky inflation in services sectors, which could prolong the period of higher interest rates.
The Reserve Bank's forward guidance emphasizes flexibility and responsiveness to incoming data. We are committed to ensuring price stability while closely monitoring the labor market and economic growth. Our projections are for a gradual moderation in inflation, but there are always upside risks, particularly from global energy markets or unforeseen supply shocks. Maintaining a credible monetary policy framework is vital for anchoring inflation expectations and fostering long-term economic confidence.
For families like mine, the biggest question is when things will feel more stable. When can we plan a little further ahead without feeling constantly squeezed? You just hope that the decisions being made now will genuinely create a more sustainable future, not just kick the can down the road.
The property market, an area of significant public interest, also faces an evolving outlook.
While some foresee continued resilience due to supply constraints and population growth, the capacity for significant price increases may be tempered by affordability ceilings and borrowing constraints. Regional markets, often more sensitive to local economic conditions and migration patterns, might see different trends compared to capital cities. The long-term trajectory will depend heavily on government policy addressing housing supply, infrastructure investment, and sustainable population planning.
A well-functioning housing market is essential for economic stability. The Reserve Bank analyses various scenarios for the property market, considering the interplay of interest rates, credit growth, and supply-side factors. Prudential measures implemented by regulatory bodies also play a crucial role in maintaining the stability of the financial system, ensuring that lending practices remain sound. We aim for an environment where financial stability supports broad economic prosperity rather than becoming a source of vulnerability.
And finally, superannuation, the bedrock of our retirement system. How will it evolve?
The superannuation system will continue to grow, driven by mandatory contributions and compounding returns. However, the investment landscape for super funds is becoming more complex. Diversification away from traditional asset classes, a focus on sustainable investments, and navigating volatile global markets will be key challenges. Policy discussions around preservation ages, contribution limits, and the interplay with aged care funding will also likely continue. For individual Australians, engaging with their super fund and understanding their investment options will become even more critical in securing their financial future.
I just hope that when it's my turn to retire, the system is still there and strong. It feels like we're always being told to save more, do more, but you wonder if it will be enough in the end.
The Australian economy stands at a pivotal juncture, navigating the strong currents of global change and domestic pressures. The story of our economic future will be written by the interplay of institutional policy, market dynamics, and the enduring spirit of the Australian people. Thank you for joining us on this deep dive into Australia's shifting economic shores.